Hello, friends. Welcome to Nirmal Bang. It's a result season, and we are seeing a very strong result season again from many companies, especially real estate sector. Today, we are going to put the spotlight on real estate sector, and in that, we actually are going to put the spotlight on a company which has produced stupendous results. And if I look at the numbers here, before I actually announce the name, the numbers actually have been almost about 50% increase in the sales volumes. We're talking about almost 100% increase in the sales value. We're talking about 75% increase in the margins, strong 50% plus increase in the profits. Collections have increased, debt has reduced all around 360 degrees. This has been a very strong sort of performance from the company, which is called as Ajmera Realty and Infra India Limited, absolutely renowned company. And to talk about the results, let me now welcome Mr. Dhaval Ajmera, the director of the company. Dhaval sir, welcome to
Hi,
the show.
thank you very much.
Once again, it's a pleasure having you back on the show, and we are looking at another set of very strong numbers. So before I take a deep dive into the numbers and ask you, I want to ask a very top view question here, and that would be: are your numbers a reflection of a very strong continuation of buying sentiments, a sort of euphoria in the end consumers, or this is something which you have been able to carve out as a special model for yourself?
There are two things. What I see is that yes, post-COVID, the real estate market overall, all across India, has been pretty buoyant. We have seen good numbers and good, results. Not only us, but many and every real estate company is doing because the market has been pretty supportive. People have started and already realized, the importance of home. They are taking decisions of probably putting a good amount of kitty in of their investments into real estate as compared to what they were doing pre-COVID. So obviously, all these are the factors which are taking real estate demand going higher, and thereby I personally feel that listed developers probably stand an edge over the others because of being more transparent as compared to others because obviously of the legal formalities and everything. And I think also what we see is, there has been a preference for developers who have been, been in this business over a longish time and delivered good amount of flats or apartments or, houses. I think these all factors count in, and that's where you see good results coming to, and I mean, taking into our case, our example, I think time becomes as we are 54-year-old company, delivered 45,000 apartments. That gives the kind of confidence to customers. Obviously, the market is good. It gives a preference for our projects as compared probably in the other micro markets, and that's where we have seen good accelerated sales coming in, and that's where we are trying to see these good results coming in. And as a company taking this queue ahead, we've targeted to grow at 5x from where we are, and that's where we started our journey post-COVID, and we are continuing to do so.
Right, and now let's take a look at the numbers here. The realization per square feet that has increased from 17,000 odd to about 22,700 odd. So again, that is another factor. I'll ask you whether it's a function of sort of projects or we have actually generally seen sort of price increases. Because before the result season, we actually were talking to industry experts like Knight Frank and others, and they were telling us about a very successful price increase being taken by the developers here. Secondly, also we are seeing that strong volume sales sort of increase here. Help us understand both from a price increase perspective, what have been the factors leading to that, and also the sort of volume performance here.
Two things. From the sales price realization point of view, yes, a majority of the factor came in from our Manhattan project in Vadala, which saw a great response, and we've done about 40% of our inventory already being sold, although we are just at the ground level. This is the attribute towards the brand and performance and trust from the market. Obviously, because that is the largest share and the price is higher as compared to probably in Bangalore or other parts of the city. That's why
Also
we have a little.
because it's a luxury project.
It's a mid luxury. It's about, yeah. So the price is in the range of 29-30,000 a square feet on carpet. So that's where you see that being more. And obviously Bangalore is at around 10,000. So that's where you are seeing this being higher. Number one. Number two, yes, price has increased, and we've also increased prices in projects, but not like a very high. Obviously, post COVID, the prices had really drastically shot up. It came down, it stabilized now, but obviously it's not gone back to what it was in terms of the input costs. It's not gone back to what it was pre-COVID. So hence there has been an incremental cost, and which is where we've also increased our pricing. And that's routine in terms of inflation and everything. So obviously, these are the two factors why you see great price realization, and obviously the sales coming more from Manhattan. And second, what was the other? Sorry, next question.
Um, I had asked on the volumes, but before you go to volumes, I want to ask you another question here, and then we'll go back to volumes after that. I want to ask on the Manhattan, about 170 crores is already a recognized revenue. Already 570 crores is a book sales. So when I look into the June quarter and then basically go to September quarter, like how much sort of recognition perhaps could be coming in these quarters?
So Manhattan is progressively. See, right now it came into a revenue recognition now, but now going forward we are at the foundation stage. So next
Okay.
6 months there will be progress, but if I have to look at the entire volume of the building, that might be less. So there will be a incremental, not a very, I won't say 20% or 30%, but a marginal incremental. But that's the foundation and the time which it takes for the building to come up. But once it reaches, the normal slabs, then it becomes quicker and faster. So the next 2 quarters are going to be more towards finishing of our foundations and basements and podiums, which will be an incremental percentage.
Okay. So should we assume that the next major recognition perhaps is going to come after some months, maybe after two,
Yeah,
three quarters?
so somewhere 2-3 quarters, yes.
Okay, fair enough. From there, we move to another major project, which is the Greenfinity. How that has performed to your expectation? Almost 80% of the inventory is sold. A bulk of the revenue has been recognized. Where is it right now?
Well, Greenfinity was a quick in, quick out project for us. We started this project sometime in the first quarter or towards the last quarter of FY 21-22. And today, in 2 years' time, we've almost completed the project. And we are right now, it is just under final finishes, and we are hoping to give possession by this next few months. So probably quarter one, quarter two, we are targeting to finish and give OC of that building.
It indeed actually has been a very sort of fast construction work again by the timelines you actually are telling us.
So
And from
that's when to be honest, we believe we are working towards this strategy a lot. So if you look at our projects like Greenfinity, Sikova, the Freeway project in Juhu, now we've taken the Eden project in Ghatkopar. All these are quick in, quick out, 1.5, 2 years, 2 years, 3 months gestation. This will become as a quick cash flow in and cash flow out project, which will help us grow beyond like this. And even the recent buyout of Vikroli is also based on that strategy. So we are working slowly and steadily working towards that as well, which will make our overall cash flows quite healthy, and it will be also making projects quicker, getting completed quicker.
Yeah, and also actually increase the IRR of the project because time is
Yeah.
proportional to the cost in real estate. So as actually you're saying. But before I go to Vikroli, help us also understand the Jew project, how it is moving ahead. The last time I talked to you, from there has been some good sort of inventory booking. And from the perspective of redevelopment project, and since it's a self-funded project, what sort of I should say, margins and what sort of profitability you're looking at?
So, Zoo is a good prime piece of land for us and a new micro market which we have never tapped. And usually this micro market or this kind of products are sold towards the near completion or or on completed, being completed. For us, we've already sold 23 to 24% of our inventory in Juhu. So that gives us a positive sign. And right now we are at the plinth level, that is just at the ground level. We've obviously the works has commenced, all the foundation works, basements, and whatever we had to do, all that is done. We are at the ground level now, and we are now going to obviously the slabs will start coming in soon, and hopefully by next year, towards the end of next year, just towards the end, we should be able to give possession for the property.
Very nice. And now let's talk about Vikhroli, something which has been an exciting development here. What's the vision there? What actually you're looking sort of from the perspective of next 2, 3 years there?
So we are Vikroli is a new micro market for us again. We although continue to grow in different segments and belts. I think Vikroli is a very good strategic location, and for somebody who is aspiring to grow in life. And what we see is, there has been this project will actually give a lot of those kind of we are targeting aspiring young customers who are looking to grow in their life and probably look at the first real estate investment. And that's where we are trying to get those kind of customers. And it's a good project with almost about 2.5 lakh square feet of sellable area, looking at a top line of roughly in the range of 500 to 600 crores, which we intend to start where we've already acquired. We started acquiring, obviously, the process is on. MOUs have been signed and things have been progressing, and we are looking at starting this project towards the third quarter or the fourth quarter of this year.
Okay. And from the perspective of the ticket size, what sort of which segment should we be expecting here?
So primarily, these ranges would be somewhere in the range of about 1.2, 1.5 crores.
Okay. And I think the first sort of cash flows should be coming somewhere around 4 quarters down the line.
Roughly first quarter of next year.
Yeah, right. Now let's go to Ghatkopar, where the Eden project is there, and your sales launch should be starting from the June quarter. So, which also implies the next time we are going to meet, perhaps we would be talking about this project. So, what is sort of expectation between June and September quarter? What sort of cash flows we would be expecting, and overall, like sort of what is the timeline of the project you're looking at?
So we are looking at this project, to we whatever we've gathered, we are just preparing ourselves for the pre-launch and now looking at launch coming in now. So we're hoping to have a very positive response for this as well, and we should be able to announce some things coming in the first quarter during the sales value of the first quarter coming in results at that point in time. So far, whatever groundwork has been done by the team, it is looking this positive. So we'll just await for next few days and months to come, and probably will know more.
Okay, so that we actually have talked about a couple of projects here, but fair to say a large part of your projects actually are almost sold. We are talking about 65% of the total saleable carpet area is already sold under Ajmera Realty. So that's something I think which our viewers should take note of. Apart from the projects we've talked about, is there any other project, Dhavalji, which you want to sort of talk about?
So I just want to give a rough brief about what we are currently doing and where we are. Right now we have 10 projects which are under construction. Few have already been completed. Some have got OC. Some projects like Sikova, some projects like Greenfinity, which are just getting completed. Those are about six of them. We are looking at about 300 odd crores of unsold inventory, which is left, and we should be able to sell in the next 1 year's time. Second would be mid-stage projects which have been launched, like Manhattan, like something in Bangalore, Lugano, Florenza. Those projects will get completed in the next 2 to 3 years' time, which has an inventory of about 1,670 odd crores. So put together, we have about 2,000 odd crores of inventory, which will be over or under construction or pipeline, and we should be able to clock this sales in the next 2 3 years' time. Beyond this, we are also launching about four projects in the coming year, this year, which will also give us a top line of around 2,000 crores. So 2,000 of our existing projects and four more projects, also about 14 odd projects where we are going to work along with this year with a total top line of around 4 odd thousand crores coming from these 14 projects. So we are looking at a great, exciting 24. So we just hope things go in order and we are able to sell these and move ahead.
Well, these top line numbers actually are looking very interesting. Let me do a recap here. We're talking about a FY23 revenue numbers somewhere around basically 440 crores. We are talking about an exit fourth quarter revenue number somewhere around 184 crores. So even if I extrapolate that, we are looking basically at a sort of strong start to FY24. You're talking about a 2,000 crore plus inventory sort of pipeline, like the revenue visibility over a span of 3 years. Was that something I heard rightly?
Yes. So these is from our existing projects, and obviously this year we are launching four more projects, which will be about 2 odd thousand coming in the next 3 to 4 years time.
Right. So that significantly tells us that we actually are looking at an average annual number of 700 CR. Like the annual number can change, but on average, we are looking at a significant expansion from where we are right now.
Yes, absolutely. So as I said that as a company we have decided to grow 5x from where we are over the next 3 to 4 or 5 years, and that's where slowly and steadily we are progressing towards it.
One word, the margins. You would be able to hold the margins where they are right now because FY20 has been really strong, almost 30% average margins. But somewhere in the range of 27, 28, 29, 30, will that be the area where you will be?
So we are. I think the margins will stabilize and would be around this range because now, if you see, a lot of our inventory is from our old projects, where I mean, old lands which we have, and obviously all these acquisitions, whatever we are doing now, along with whatever we have been in and around those range. So definitely, we will be able to stabilize this and continue with this kind of margins going on.
A word on what it has been so far from the perspective of rising interest rates. Was there any sort of impact for you from that? And I'm asking you because now everybody is talking about that, yes, we have reached the peak of interest rates, maybe 6 months, 8 months, 9 months down the line, they might drop, but at least no more increase in the interest rates. So far, that's the message coming. Any impact for you from that, or largely it's a pass through?
Well, to be honest, it was like a pass through. Yes, definitely there was an impact in the interest rates over the last entire year where we had reached to an on our if I have to look at our company's average interest rate was about 13 point some percentage. And but over the last from as of April 1st, that has come down to 11% because we got a good reduction from our lending companies and banks, which with our constant growth performance and sales performance that has really helped us also reduce our interest rates, and that's where we are seeing that our interest rates will come back to our pre-COVID levels, and we are looking at around 11.5% of interest, and even trying to target to get it below that.
Okay, so that's on the interest rates. Also, the year has completed the financial year. Dividend has been announced, a sort of welcome news for the shareholders. What was the thought process of the board around the dividend? And is it something which is proportional to the growth in profit? Like how basically it is being seen?
So we, as a company, has always been very pro-dividend, and because that's why we feel that it needs to be, the shareholders needs to be rewarded for whatever work that they've invested in the company. And if you look at we've declared 30% dividend. So so that as dividend. So I think it's just basis of our proportion or little bit less, I would say, from our margins, PAT profits, but we continue to pass on the benefit from our growth to our shareholders.
Right. And perhaps my last question would be somewhere around the debt. The last time I was talking to you, and we were discussing that gradually the strategy is to actually keep lowering the debt to a sort of extent which is like more like a working capital debt. And we have been seeing reduction in the debt. Fair to say, leverage ratios are anyways actually very healthy. What's the word on the debt?
So currently we have around 775 odd crores of debt. Which is obviously project based primarily, and we are trying to ensure that whatever these debts are, we are trying to reduce as much as possible. And we continue to, obviously, debt would continue to come in the projects wherever we launch because that's kind of a working capital requirement. But overall, with the project base, that will continue at project basis, but at a group or an entity level will be reduced over the next 1 2 years. And we are targeting to make it as good as zero.
Well, Dhavalji, I think it has been an exciting year for you, and thank you for coming on the show and giving us all the insights on the results, on the projects, and what we have heard from you. For our viewers, it looks like a very exciting journey for the next 3 years. We are almost looking at doubling of the revenue, the average number, but as per your target of making the group 5 times, perhaps that is something which our viewers should be watching out for.
Thank you. Thank you very much for this.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.